Taxes. It was Albert Einstein that said the hardest thing in the world to understand is the income tax. And it was Will Rogers who said the only difference between death and taxes is that death doesn't get worse every time Congress meets. Thanks for joining me for another episode of Your Money Mindset, guiding you to achieve true, lasting financial freedom and peace of mind. You may not know this, but your tax bill is likely your largest expense. It is for the average household. And today, I want to spend a few minutes offering you some tips on paying less in taxes, which I think we could all use right now. So stay with me. I think you're going to enjoy this. My first experience with taxes when I was 6 years old, and I was asked to be on Hawaii Five-0. That was the famous TV show featuring Steve McGarrett and Dano. I ran up a hill with two police officers behind me, showing them where the dead body was. I like to think, well, I was the hero of the show. It was me, the 6-year-old, who broke the case wide open. In any case, I was to be paid $50 for this 20-second segment. Not bad for a day's work. That is until I got my paycheck and noticed $14 was missing. Yes, I was taxed, and it was excruciating to see that money vanish in the wind. And at 6 years old, I felt I was ripped off by my own country. And what made it worse is my dad forced me to put the other half of it away for college. The trials and tribulations of being 6. Look, taxes are unavoidable. You've heard the expression, I've said it before, there are only two guarantees in life, death and taxes. But we have to pay them. They're essential for functioning society to operate. They cover infrastructure, government agencies and employees, the court system, the military, law enforcement, social programs, schools, parks, recreations, and many other things in society. But what you may not fully understand or realize is that the amount you're taxed is not based on your total income. Your tax bracket is based on your taxable income, and it's a huge difference. And there are many legal ways to lower your taxable income. But the one thing you absolutely don't want to do is try to cheat the government, refuse to pay your taxes, or try to hide your assets or your income. Look, tax evasion is a criminal offense, but tax avoidance, well, that's an American pastime, and there's nothing wrong with using the tax code legally to lower your tax bill. Now, as far as simple and easy tips that can help you pay less in tax, let's get right into the grit and grime of the subject. So, number 1, utilize flexible spending plans where available. Most of us have to spend money, right? It's obvious, we gotta live. Many employers do provide some opportunities to set aside a portion of your paycheck for what may be considered a flexible spending plan. And some of the most common reasons for these flexible spending plans is for dependent care or medical expenses. And flexible spending plans are pre-tax plans, and they can cover health insurance, dental work, and other medical expenses. And what's great is that they're tax-exempt dollars. However, do keep in mind that there is often a use it or lose it stipulation to these flexible spending plans. If you don't use that money by the end of the year, for example, you could lose it. So make sure you know the rules, and if you utilize a flexible spending plan, it's for necessary expenses down the road. Number 2, donate to a charitable organization. Charitable contributions are a wonderful way to reduce your overall tax bill, but some people are often confused about write-offs and how they work for charitable donations. And a lot of people assume that if they donate $1,000 to a charity, that they're going to lower their tax bill by $1,000. That's just not the case. What it does do, what your donations do, is it lowers the taxable amount that you're taxed on. For example, if after all your deductions, your tax bracket determines that you owe the government $4,000 in taxes, a $1,000 contribution isn't going to mean that you now pay $3,000 in taxes. What it does is it simply lowers your taxable income, altering your tax bracket, which will then lower your tax bracket by a certain amount, but not $1,000. But not only is it a great feeling to do this and support a worthy cause, but you get a little benefit for yourself at tax time. Okay, number 3, bundle your contributions. And this can be a little tricky for some people. But if you make regular contributions to certain organizations instead of taking those deductions in one year, you might bundle your contributions to maximize the write-offs in that particular year. For example, you might tithe every week at your church. At the end of the year, though, before January 1st comes, you might want to take what you donated that year and make a one lump donation to cover the entirety of the following year. That allows you to bundle those contributions, which is valuable if it puts you beyond your standard deduction. And there are many ways to bundle contributions, including donating old clothing and old cars and other similar items that you have. Okay, number 4, monitor your vehicle expenses for business purposes. If you use your own vehicle for business travel, keep track of your expenses, including fuel, repairs, insurance, and so on. Some of this can be written off as a tax deduction. And even if your vehicle is used for personal and business reasons, there is potential for a tax write-off. Number 5, track your health expenses. It is possible to gain tax relief as a taxpayer when you have unreimbursable health expenses. It could be for yourself or even a family member. And there's a limit on how far back you can claim tax benefits on health expenses. And keep in mind, even if you're claiming an expense for a family member, you need to be the one who paid for it, such as for your dependent child. Some health expenses that can qualify for tax relief include medications, doctor visits, non-routine dental care costs, eye laser treatments, speech therapy for children, and many more. Number 6, monitor any home expenses, including rent. If you have a home office, you can deduct some living expenses, including rent, from your taxes. Now keep in mind though, just like with a vehicle, you can only deduct a portion that was used for business. Generally speaking, it's based on square footage. So if your home office sits in a 10 by 10 room, that's 100 square feet. And if your home is 1,500 square feet, you can work out the percentage that's potentially deductible for your home office. You need to be clear and honest when it comes to your home office and tax deductions, because if you're audited, the auditor may very well want to see what you actually utilize as your home office space. And the same goes for utilities and other operating living expenses. Number 7, another great way to lower your tax bill is to contribute toward a retirement fund. These funds will also grow tax-free until you reach retirement and start taking withdrawals. And the earlier you start, the more likely you'll have a good-sized retirement fund when you reach your target age. And even if you didn't make a contribution to a workplace 401k, for example, by the end of the previous calendar year, you can still make tax-deductible contributions toward a traditional IRA up until the official tax filing date. And this year, it's July 15th. Every other year is April 15th. It's also important to remember to choose the right filing status in order to maximize your return. You may be married, but filing separately could provide you the best tax benefit. Or, depending on your living situation, you may benefit by listing yourself as head of household. Buying a house could also provide you some tax relief. You can deduct interest on your mortgage payments for up to $750,000 of mortgage debt, and you can also deduct up to $10,000 for state and local taxes. However, in order to get the most out of these limits, you'll have to itemize your deductions on a Schedule A form. These are just a few ways that could help you lower your tax burden legally. And I know this isn't a fun topic, but I can't tell you how important it is, given the fact that taxes are likely your largest expense. And the more you know, the more money you'll save and keep in your pocket. And I strongly suggest you meet with a CPA, not only at tax time, but throughout the year, because it's likely too late to come up with any tax savings if you're meeting with your CPA when taxes are due. So to wrap up, as I always say, your financial destiny is not a matter of chance, it's a matter of choice. And it's never too late to start your journey to financial freedom and peace of mind. Check out my website for free tools and resources that can and will have a tremendous impact on your financial future. Please don't forget to hit the subscribe button and please leave a comment below. I would love to hear from you. Well, I hope that was helpful and we'll see you next time.